You've probably heard the joke. A billionaire wouldn't bother picking up a $100 bill off the ground because, in the time it takes, they would have made more just by standing still. Sounds ridiculous, right? But that joke hides a powerful truth. Most people never learn. Billionaires don't make money the way you think. Forget paychecks, Christmas bonuses, or endowment tips. While most people obsess over how much hits their account every 30 days, the rich are playing an entirely different game. A game that's quiet, elegant, and tax-proof. And that game has a name. Buy, borrow, die. Sounds insane. Just wait until you understand how this whole system works and how it's 100% legal. Asterisk. It all begins with an illusion. The illusion that income equals wealth. Most people believe being financially well off means having a good job, a solid salary, maybe some bonuses or side gigs. But for the ultra wealthy, getting paid directly is actually a problem. Why? Because earned income, meaning money you receive for your work, is the most heavily taxed form of money. In the US, high earners can lose up to 37% to federal taxes alone, not counting state taxes or Social Security. That's why people like Elon Musk, Jeff Bezos, or Warren Buffett avoid salaries like the plague. Musk went years earning $0 from Tesla. Bezos made a CEO level $80,000 a year. Zuckerberg, just $1. The reason they don't want income, they want assets. While average people chase raises, the rich collect shares, real estate, and private businesses. They don't live off liquid cash, they live off appreciating assets. And the biggest secret of the rich, if you don't sell, you don't pay taxes. It's called unrealized capital gains. Imagine buying a house for $100,000 and 20 years later, it's worth $1 million. You're technically $900,000 richer, but unless you sell it, the government doesn't get a cent. The value is locked inside the property, and this is where billionaires thrive. They don't sell, ever. But wait, how do they afford jets, yachts, mansions, and staff if they don't have cash? Easy, they borrow. And here's where the magic and madness of the system begins. When regular folks take out loans, we get buried in high interest and decades of repayment. A mortgage, 6 to 7% interest. Credit cards, 18 to 25%. Student loans, financial jail time. And worst of all, we pay this using money that's already been taxed. So you pay income tax just to pay interest. Now the rich, they borrow money with ultra-low interest, using their assets as collateral, and they pay no income tax on any of it. Asterisk. The middle class finances a car with their paycheck and drowns in interest. The rich finance a jet using their stock portfolio and pay close to zero. Why? Because banks trust people who own things more than people who just earn. You might make $200,000 a year, but with no assets, savings, or real estate, you're a red flag. But the person with a $5 million building can walk out with a $3 million loan in a handshake. The system loves people who already have and punishes those who only work. This brings us to the second pillar of the buy, borrow, die strategy. Borrow. The billionaire walks into a bank with Amazon shares or prime real estate and says, "I need liquidity, but I don't want to sell." The banker smiles and says, "Let's set up a credit line." Boom, millions released. With that borrowed cash, they live large. Homes, jets, private chefs, charities, and reinvestments, all tax-free. Why? Because loans aren't income, and income tax doesn't touch borrowed money. Even the interest they pay may be tax-deductible if structured properly. Meanwhile, their assets keep growing. If a $100 million portfolio becomes $150 million, in 10 years, they just borrow more, refinance, reinvest, and the cycle continues. They've turned invisible wealth into usable capital without ever cashing out, and most importantly, without ever triggering a tax bill. Now, here comes the final twist. The part where death is part of the plan. This third phase, die, is where the ultimate trick lies. It's called the step up in basis. Imagine Grandpa bought $1 million in Apple stock back in the 90s. Today, it's worth $10 million. If he sells while alive, he owes taxes on the $9 million gain. But if he holds till death, the cost basis resets. The heirs inherit it at the current value. So if they sell the stock the next day, they owe zero in capital gains tax. That's right. The tax bill dies with Grandpa. And what about those massive loans they took out while alive? Covered. Most of the wealthy take out huge life insurance policies stored in irrevocable trusts. When they die, the policy pays off the loan. The heirs get the assets debt-free. No income tax. no capital gains tax, no estate tax. If it's structured right, the original owner spent decades borrowing against appreciating assets, living a luxury lifestyle, and then passed on the entire fortune cleanly to the next generation. No selling, no taxes. Just a perfectly engineered wealth machine. In the end, the game is simple. If you own assets, the system works for you. If you own nothing, you work for the system. People with stocks, businesses, and real estate grow quietly, invisibly, and tax-free. People with paychecks pay for everything. That's the difference between playing the game and being the pawn. And now that you know about buy, borrow, die, the question is, what are you going to do with this information? Asterisk if you liked this video. Hit that like button, subscribe, and turn on notifications. And comment below. Do you think this system is fair, or is it time to change the rules of the game?